Okay, welcome to the practical aspects of Elliott wave forecasting. But I'm going to start with something different. We're going to go a little bit further ahead of where I was at. So close your eyes. Let's. What I wanted to do is to first cover my worst stock market forecast. If that's all right. I don't know if any of you guys or ladies do any forecasting. Does anyone forecast here? No? Does anyone care? Some people want to do forecasts. Some technical analysts forecast. Now, what I learned from my forecast. Now, I used to do forecasts for the ATAA since 1992. We started in 93, 94, 95, 96. So every year we could do some forecasts. And that was fun. Eventually people started putting things in the paper that I did. And so the other day, Peter Switzer, I'd like to thank Peter Switzer for this topic because he asked me on Sky about a month ago, he said, well, what was your worst market forecast and what did you learn from it? And I thought, shit, this is a really good question. And like, usually because they don't ask you the questions before you go on, as Michael knows, he just runs off, or maybe I don't control it enough and send the questions that I want him to him. But what was I learned from my worst market forecast? And this was my worst market forecast on the 21st of September 2009. And basically you can say, they called me the bell ringer on that one. And you can see, if you're going to actually get this recording, which is probably better than watching the camera there, go on the website ATAA, ades.com.au ATAA. And basically what we're seeing here is, I just put that in. It's saying here, basically, I earned my reputation, blah, blah, blah. And I've said here, the S&P 500, S&P ASX 200 reached 200, a height of 47.49 on Thursday, just shy of the target. This is the 21st of September 2009. I said basically markets must be able to convincingly break 4,800. And I earned my reputation by calling the top 2007. And I said the market would rally up from March to September before falling. So we're in that September period. So one of the things that it says, basically, if it couldn't break by that, it's in trouble. So the strong chance that this week will mark the high. Now, of course, we know what happened. What happened was the market went up and continued to go up because the Feds came out and all the central banks came out and started putting cash in. So we had this extraordinary boom around that time that went on until basically early 2010, April 2010. And I'll tell you why I actually got really up this. And this is a paragraph. This was probably my best market forecast, which I gave to the ATAA in Newcastle and also Toowoomba. This is the forecast I gave in December 2008 to Newcastle and January 2009 to Toowoomba. It basically said here, blah, 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 blah.
You said in English, please, David?
After that, he says the market will climb in a choppy manner to 4,200. So this is in late February 2009, the bottom of the global financial crisis. And it said the market will rally to 4,800 in September, and then the last most severe leg of the bear market is possible. So I had that in my head. Everyone's patting me on the shoulders. 2 weeks later, the editor of the Financial Review, I think his name was Glenn Mumford, said I should be in jail for telling people to buy this. And what happens with newspapers is they delay things that aren't saying the same as everything else. So if you say something different in the newspaper, what they do is they actually will delay it because there's more press. So when I was asked on Friday afternoon to go in the weekend review. I thought I was writing for the following week. So there was a that time lag that I thought normally comes in, because every time I put it in, it had been a week or two later that it come out. So I thought, I'll be clever, I'll put it in now and I'll talk about that. That's fine, they won't have time. They put it in the next day. And so it was a week earlier, and that Glenn Mumford guy was saying I should be in jail. So I felt really good after I've learned he said that about 2 months later. After that, I was trying to justify it based on my ego. I got in the paper again to redeem myself on the 21st of April. I think it might have been the 15th. Anyway, saying the market was topping. And as you can see, the chart there went up there, and I got off the phone and told the AFR guy that it was dropping down. So basically what that was my ego getting in the way. And as Mark said, we had my 2011 forecast. This is the forecast that I had for 2007 and 2011. You see the forecast saying that the market should bottom on the week of the 9th of October on the Dow. This was the one done in advance, the one I do every year I generally calculated in November, December. So the week of the 9th. Now you will notice that the S&P actually and the Dow actually bottomed in August. So that wasn't a great forecast, but it was very useful. And when I went on television on the 4th of October and I said, you should be buying this market. And I went on to Melbourne Traders Expo and I put it in the Financial Review. So these have been the other forecasts for the markets in 2012, 2014. Now, my biggest learning from that is ego was the problem. I was trying to live to those words that I said in the Financial Review one, which blew up my ego and put smoke up my bum, if you like. So don't let your ego get in the way if you are doing forecasting. You guys have probably had it all beaten out of you. I'll continue to do this because it's worked and it's worked well for my members, and that's what they pay me to actually pay attention to. Because what we do is we move our asset allocations, our superannuation funds out of cash and into equities on the right timing. And falls come before pride, come after pride, not pride comes before. Falls come after. I don't know what's the expression. Falls come after pride is the expression. You're always going to have your worst trade after your best trade. I don't know if you've experienced that, and I detect a lot of mechanical guys in there. I used to be a thoroughly mechanical trader. I started off with moving averages, went berserk, lost $10 million doing that in 6 months, and had to learn from being too systematic at the wrong time. So I actually move in and out of system tradings and simple things. So I don't mind system. So be humble or stumble. And we'll go back to the original story. Do you want to have that break now, Mark? You've got another 10 minutes. Okay. Okay, good. So I'll start off with this one. An Elliott wave, everyone gives out. Who does Elliott wave here? A couple of people, 10 people, Elliott wave. You find the better traders in the world do Elliott wave. Just as simple as that. I'm not talking about people in the room or me in particular, but when you've got guys like Paul Tudor Jones, who is an Elliott wave person and manages massive amounts of money, you've got to understand. Most of the people in the banks trading Forex, I learned over the years, Forex traders are Elliott wave based people. Why is that? Because it gives you risk reward and probabilities. And I've got to go back to the front part of this already. So whether you like it or not, Elliott wave gives you risk reward and probabilities that you cannot get with anything else. It also gives you the psychology of the market. Systems traders, I lost $10 million for my company in 6 months by being a system trader. And that was the worst experience of my life. Not counting the Financial Review forecast on the 21st of September 2009. Anyway, so what's practical Elliott wave for forecasting? You can use it for trading, you can use it for forecasting, you can actually use it for systems trading. What I do is I use Elliott wave to turn systems on, and I'm going to show you a real live example. So, plus we talked about that. In the beginning there was chaos. And this is all you need to know about Elliott wave. Chaos is congestion. And then Genesis says that in the beginning there was nothing, basically. Chaos gives opportunity. What chaos does is it brings the market into balance. And tonight we're going to talk about some wonderful things. Chaos leads to clarity. Who loves trading in congestion? Who's a range trader? Brad, yeah. Can't help it. Elliott Wave is fantastic for working out when you're in a range. For example, the S&P 500, we've been shorting on the highs and buying back on the lows in this big range in the S&P because of Elliott Wave. So what do you do when you're confused? You'll learn a little bit about that. What can we do about that? And we'll talk about the two Elliott Wave rules that I cherish and what to do when your forecast is not followed. So who here is, I don't see any real beginners. Who here has been, who's here for the first night? A couple of people. Are you beginners or just first night? First night, okay. There aren't a lot of beginners entering into the markets now, and that's not really often a sign of a top. Who here is a pure technical analyst, no fundamentals? Who here is a fundamentalist? Okay, a couple of people. Who uses both? Great, smart people. Who runs this SMS using only technical analysis? Only technical. Okay. And advises other people as a technical analyst. Who does advisory? A couple of people. Okay. And basically who's starting out learning about technical analysis? Right. That's good for that. You join WD Gang. This is Dawn. Dawn is one of my Profit Hunter group members, John Bolton Smith. And basically, she says some nice things about me and David Fuller and stuff, and she keeps on saying nice things. She attends my webinars, and really it's a pleasure to have Dawn there because she pulls me up on some things, says, hey, what about this? Like, why aren't you using an 11-period ADX rather than a 14-period, which I like to use? And yeah, Dawn's 84 now. She was 84 a couple of weeks ago. Be good to have her along here to do some talks. So here's my Elliott Wave forecasting secret number 1. Impulsive moves are the easy things. Who thinks about third waves when they think about Elliott Wave? A couple of people. Who thinks about C waves more than wave 3s? C waves. Who thinks about wave 2s and 4s? Nobody. They're the best. Yeah, absolutely. They're the best. Basically, you have to do the work in the corrections. And so, for me, corrections are really more important than impulsive moves. So if you're understanding Elliott Wave, all you're looking for is an impulsive move to happen after a correction ends. It's as simple and as difficult as that. Because when does a correction end? When the last buyer has given up on the top and just exhaustion. So that's hard to prove. It's also hard to prove emotionally, especially when a market is manipulated like the S&P 500 it has been for the last 4 or 5 years. Corrections create chaos, not Karen Ross, but chaos. That's not Karen Ross, chaos. So corrections are chaotic events where Brad pulls out his stochastic, his Williams percent R, his Brad oscillator, and says this is the top and bottom. The problem with top and bottom trading is what?
You can't describe it
Okay, you're not intelligent. Okay, good. So I'm not picking on you deliberately, but you said you were a range trader. So say I'm trying to pick a top. The Aussie yen, I remember I was trading the Aussie yen like crazy. It was in a range, fantastic. This is about 1993, going in and out, in and out, in and out. Made some good money, very good money. And then one day, some big Asian bank comes out, and I'm selling at the top. I can't remember the big figure. It might have been 70 or 75. I'm not sure exactly where that went, what the level it was. But this big bank, Japanese bank, came out and just hoovered the market, and I had a stop that was filled like 150 points higher. All the work that I'd done, scalping, was just wasted because of the massive trade this guy put on. Just massive slippage in the Aussie yen, which you wouldn't expect. Ranging traders tend to lose all the money that they make in the moves against you. That's what floor traders do. They sit in there scalping, the price maker's scalping, one tick, one tick, one tick, and then all of a sudden somebody comes in and lifts the whole market. They're all left scrambling because they've sold that point, and then they're trying to find the next offer and the market's just being lifted. So be aware that with my profit hunter group trades, most of my best trades come from buying breakouts and not caring about whether it's a dip. So some of the most powerful moves, and we'll have a look at one of those. Okay, so impulse moves are the easy things. All you have to do is buy a breakout, you turn on your trading system, like Peter's got, buy a range breakout, no problem, just go in. Simple, system trading's pretty simple once you can see a range. So what I do is I bracket the market when that happens. I see the market form a range, and then it breaks out, and I'd like to go with it. So you have to do your work in the corrections, and sometimes you get whipsawed. Has anybody seen Execota's whipsaw style? It's beautiful. He did that at the IFTA in San Francisco. I just loved it, watching him play the banjo. He had a jam afterwards. Corrections create clarity after chaos. What's a correction in Elliott wave? Wave 2 and wave 4. What should wave 4s do? We'll talk about those later. So here's a real life PHG trade example in Woodside Petroleum. Okay, tell me about that chart. What are you going to do with it? Trader, you're going to be selling up here. You're going to be selling there and buying it back. You're going to be looking down here and thinking, breaking down, and then you're going to get squeezed, and it's going to go up here, and you're going to get bullish maybe, then it's going to drop down here, and you might get bullish there, and you're going to get whipped and whipped and whipped. Whatever way you're going to be as a trend follower. It's the way of life, isn't it? This is chaos. Shell selling up there, Macquarie Bank. Sorry, JR tells me never to mention brokers for licensing purposes. By the way, this talk is from Ideal Financial Group, and we have it up on the. We should put it up on the board with the AFSL number. But you've been disclaimed anyway. So Woodside Petroleum, this is the daily chart. So how can you make a trade out of this? Just you can do some range trading, buying, selling, buying, selling, buying, selling. You can buy a failure here, and you can buy a breakup here. You can get this scoot. So there's these fantastic moves going on. Is it worth all of that move? Who'd like to trade this market? Shorts look great. So do the longs. I like the longs too. I like also mean reversion coming back to the middle around about the $38.40 area. Fantastic stuff. Okay, that was the 4th of April. And this is from my Profit Owner Group transcripts. What I do for the PHG members is I videotape them, I keep a transcript of all the trades that we did. And where are I? Come back, all this given. 9th of April, basically I said, it's holding in the higher ranges. Let's buy out on a breakthrough $39. Will be a buy signal with a stop loss at $38.55. I'm actually happy to take that, which I hadn't been for a long time. Let's do that on a PHG trade. So if you think this is recording, if you think I'm talking shit, then don't look at the recording. So this is the 9th of April, WPL buy, 9th of April, break of $39. I shifted that stock to a $38.65 stock close only. $40.20 was my initial target. And I've got another chart here. We can see here that on this day, this was the 8th of April. So we haven't got in at that time yet. We're just sort of waiting. There's something that gave me a tip off in here. That was a confusion triangle pattern. That really is important to me. Now we can see here that we'd had a shakeout down here and we'd had some higher bottoms. Simple stuff. You can easily program in. So by the time this was entered, this was on the 10th of April, I did an update and just raised the stock to $39.11. We can see this little fella break out. We can see the volume breakout. This is fantastic volume on the upside. And before this, I said to everybody a couple of days before, I said, I think Shell's not going to be up there above that $39.50. Who knows the Woodside Petroleum chart well? Okay, fantastic dividends. All of you should have had it in your self-managed super funds. All your investors should have been in there. Awesome dividends. Your brokers should have been telling you, but most brokers were telling you don't do this because Shell's up there. So I like to go against what brokers say, particularly on mass. I really, really enjoy that. And I saw one guy who will remain nameless talking strongly about how you wouldn't buy Woodside. The day that we took that PHG trade, I said, let's buy more above $40.20. So, and also, even one of my clients who was a professional advisor, and she said to me I said, it's breaking out. I was jumping out of the skid. She basically said this, Woodside Petroleum short, another charge at the top, shall I short here? And I said, no, not sure why you'd want to do that when it's broken the level, and I've been warning at a target of $48 on a longer term basis. So you guys all know not to trust your brokers. Who's a broker? No. The brokers are there to sell to you. They're not there to advise you. Some of them are good. Michael's good. I do agree with Michael's stuff. But generally, they're not there for their knowledge of the markets. And they are there because they're there at filling your orders and getting them done. You all know this. I'm preaching in converted, so I should just shut up. But the chart looked like that. This is breaking out. I'm going, Sarah, what are you doing? This is why you pay me. Stop it. And the people who are professional advisors don't get paid. Their banks and their stockbrokers and their fund managers don't pay me directly. The actual individuals pay me. So they should be listening, and it's good that they do. So, Woodside Peak breaks out. So what do? Who's a system trader? What would you do if you bought a nice breakout on this?
Let it run.
Let it run, and what would you do with your stock?
Just keep raising.
Just keep raising it. It's quite boring, isn't it? But it's good. It's really boring but good. My best trades have been on planes. All I do is get off the plane and put my stop on, find out where the market is and change the stop. Those are the best things. So basically, we're still looking to, where are we? That was Westpac. I shouldn't buy tips. So forget about that stuff up there. We bought more on a break above $40.30. And basically, it was actually above 40.20. Phil would have been around 40.30. We can move our stop loss up to 39.70. This is like a freight train at the moment. So for investors, the stop can be raised to 39.50, and for the traders time frame and intermediate time frame players, 39.70. So all we're doing is moving up the stocks. Basically, Profit Hunter Group members include the complete beginners who just listen to my advice, don't put anything on there. I've got Macquarie Bank, BBY, RBS Morgans, Shore Stock Broking and Wealth Management, financial planners like Blue Financial and Omni Wealth, and people, just normal people, sophisticated traders. I've found the best people are the people who are experienced traders who have got bad habits, who become my members, and even systems guys. So we have fund managers. There we go. So to recap, it had been in a huge congestion area. What does a huge congestion area do for us? Builds up balance. The market's in balance. In a congestion area, we're looking for balance. So what we're looking for is people to be confident about buying dips and confident for selling rallies. That's simply that is. Now we lose the interest of the trend followers. We lose the interest of the hedge funds. So there's a lot of firepower sitting outside there, because basically the market's just playing with itself. People selling on top side, buying on bottom side. It gets boring, and it gets so boring. We look for a low base. And so we're in chaos. And it's basically in chaos. And it had formed a lower time frame chaos with that little triangle. That's why I was really happy to buy the breakout on that one. I could see that triangle, I could see the higher bottoms, and if you can program that up, you can create a system for you. and also nobody loved it. So the higher time frame players had no interest in it, and I figured Shell wouldn't be there. So we set a trap. Now, basically everyone was scared because of Shell, and the brokers were engendering that. So believe it or not, fund managers do listen to what brokers say. They might say they don't, but they do. If they follow it, what they do is they get research from a lot of brokerage houses, and the brokerage houses say, you shouldn't be buying that. And then they turn around to their asset allocation manager and say, can I buy Woodside Petroleum? And they say, no, all the research, we can't go against the research houses. So they don't, and that creates a demand later on when the market puts up. That's me as a kid. I used to create chaos too. Anyway, here's Woodside Petroleum. We've raised our stop loss to $40 on the 20 cents on the trader's time frame to break even. This is on the 23rd, and we've taken 1/3 profit. This was the weekend. Over this weekend, the weekend before that, I individually coach a guy who was a complete beginner in the markets. And I went up to Coffs and spent some time with him. And basically I'm saying, we're looking at Woodside Petroleum at that $40, before it broke out at $40.20. And I said, we really have to add to this position. So sometimes actually going and teaching people, if you are any good at what you're doing, if you teach somebody, you get some clarification when you actually have to convey that to somebody, what I'm doing here, why am I doing this? And what I got him to do was to take something that he'd already learned and we applied that analysis. So really important to review with fresh eyes. And it was very simple analysis he was doing and beautiful to see that we should have added to the position. So we bought the breakout, we added above $40.20. That was on the, even though that was my target. So if it blew through 40.20, I knew it had some more strength because Woodside Petroleum wasn't up, or because Shell wasn't up there. And so we had that big blast up. And it looks simple in hindsight, and every system trader in the room will know that this is really what you're going for when you're a systems trader. You're looking for a trend. You're not looking for anything else. You're looking for a big, huge move. We took profit on, where did we take profit? We took profit of 1/3 on the close of this day, and my trader's green room guy was saying to me, why did you do that? Well, I couldn't work out why you did that. And I taught him that little trick to take profit there. We also took profit on a rally back up to $41.13. Now today it's up about $41.13 and we're running 1/3 at the moment. And I have a feeling it should come back down into the $40 region before it goes up to $48. This is a bit like, does anyone remember my Commonwealth Bank call where I said it was going to $78 back when it was $55?
Yes.
This has the similar feeling to that, Bruce. Yes, Bruce is a member, so he knows that sort of stuff. These are the sort of questions people ask me all day. Apparently, this is something that I never understand, and I actually listen to what people say on the television. I love listening to what people say on the television, but I look at it as a collective people verbiage. FMG, short-term short. Now this guy's a wealth manager, a major stockbroker. Apparently iron ore is limit down today. I could never understand what's going on with iron ore. Because iron ore, people saying up at 137, it's going up to 180 or 200, and BHP's, all the BHP's managing directors saying it's going up and we're going to be making heaps of money. I'm going, this doesn't look right. The chart's actually going down. And it went limit down today, 5%. This is today. Target is still $5.07. That's just a short-term target. I've got a bit of a lower target here. I still don't understand. And if you're shorting, $5.40 at stop. I don't understand why people don't look at the iron ore price when they're trading iron ore stocks. So I thought there was a bit of a bargain out there. Here's Dawn as again, and you can read that later. So this is a bit about me. If you are a beginner, I want to speak to you. You are the luckiest people in the room. Because you don't have any shit to overcome in your head and in emotions. As traders, we get scarred by our wins and we get scarred by our losses. Why do I say scarred by our wins? Before I lost $10 million, I made $65 million for my company. That was the worst thing that could have happened for me because my ego went out of control, a bit like this forecast. Like thunderbolts would come out of my hands. And that actually creates a problem when you're actually trading. And because you're thinking back, I've got to go back and repeat that. Whereas a trade or an investment is just a series of the same thing over and over again. You get rewarded by being consistent in the markets, not by being or jumping all over the place. So if you think, go back and you go, well, I made 65 million, I should be making holes now, and you keep on battling and digging yourself bigger holes. So as a beginner, if you can learn pure stuff and the search, one of my traders, green room guy, came to me. He was green, but he'd learned all this stuff. He'd done a whole lot of courses, and he was thoroughly confused. He hadn't really traded he traded as an investor or invested as an investor, but he hadn't traded as a technical analyst, and he was thoroughly confused. So all I did with my coaching was to strip him back to stuff that he understood and realised what it was. And he took the WPL trade. He didn't take profit when I told him to, which was a good lesson. I said, this is where you take profit. And he went, I didn't understand why. So I didn't think it was worthwhile taking profit. I said, no, you have to take profit and just do the thing. So if you are a beginner and you find a method, find it, test it, and just do it. Don't learn any other methods until you've found that this method that you're using doesn't work. If it works, you're better off, because you can stick with the same thing. It might be boring, there might be no variety, but if you want excitement, jump out of aeroplanes and go scuba diving and go, do whatever you do for excitement. Because trading and investing is just a simple process that you've got to repeat and repeat. And Mark really wants me to get off the stage for tonight. We'll be back.
I think we'll just use now to have a very short break, and we'll be back here soon. One of the things I wanted to just ask everyone is that just a show of hands for coming to dinner tonight. And the other thing I just wanted to ask is the preference between Labora, the Italian pizza place, or the Chinese restaurant downstairs. So if you prefer the Chinese downstairs, show me your hands. And if you prefer the Labora Italian restaurant, show me your hands. You're going there by yourself, right? Okay, all right. All right, thanks. About 5 to 10 minutes. Okay, if I can ask everyone to start taking their seats, and we'll start the second half of the presentation. Okay, I'm just going to call David back to the stage, and we'll get the second half of the presentation underway. Just for everyone who's coming to dinner, we're actually going to have the dinner downstairs at the Chinatown restaurant straight after the meeting. So I'm about to hand back to David, so we can take your seats now.
Okay, for those people who bothered to dig up a card of mine, if you look on the back there, you might see a bit of writing. If you can give that to John Robertson, if you find the card at the back, John Robertson. If you didn't pick up, don't bother. You'll get something of value. And if no one picked it up, then that's fine. Okay. This is an interesting tidbit. This is a real-life frozen woolly mammoth. That's pretty amazing, isn't it? And did you know woolly mammoths were around when they made the pyramids? They were around for pyramids. Pyramids had 1,000 years on the clock before the woolly mammoth went extinct. Stuff we don't know. Yeah, I don't know what happened. Maybe men got good at hunting stuff and the woolly mammoths just had their days numbered, or Ice Age just disappeared, and they liked hanging out in the ice section. This me is in early days. This is I wanted to talk about being a young fella, and
Which one is you then?
Anyway, so when you're young, when you're in, just full of piss and vinegar. One thing it'd be great to have is young people coming into the ATAA. I don't know what's going to do that. Maybe if you talk about Forex trading pips and all sorts of stuff. Rod, you're the youngest man in the room. He's pretty fine. One of the better traders too. I started really trading in 1985, got a bit lucky. I got mentored by women, and it's amazing. Quite a lot of my members are women. Probably about 60% of my membership are women. Profit Owner Group. And Dawn really helped, Cathy McDicken, hard as nails, but really fair. I read a lot of books and did a lot of charts, and I served the apprenticeship, if you like. I had a really good run, as I said. Something like made $65 million between 1987 and 1989, trading currencies, and then burnt $10 million.
David,
Yep.
I just asked. So you made 65 million, lost 10 million.
Up 55.
Yeah, that sounds quite good.
Yeah, but you've got to remember you're up there, and then you bring down 10 million. It's worse. It's worse. No, I didn't. I got sacked for making money in a fund manager. I'm sorry, David. We're going to have to let you go. You're making money by trading, but you're doing the opposite of what we want you to do. It's actually the exact words. We want you to follow what we tell you to do. And I'm going, but I'm given permission to do this either side, and I'm making money for you. And you guys are complete idiots when I see you as a group. So what hurts you in trading and investing? I'm not going to answer for you. What hurts? What, losing? Okay, losing a little or losing a lot? Losing many times, making a mistake. Yeah, that's better. That's a better answer than losing, because unfortunately losing is part of the business. Being caught in a range. Why I lost $10 million was I was a trend follower in a range. So I decided after that I better learn how to understand what goes on in ranges, and then I started to learn Elliott Wave. So systematic guy turns trend follower, turns mess maker in 10 million in 6 months. Because, 2.5 years to make 65. Yeah.
Well, then, when you say you made $55 million, on what?
There's a $300 million exposure.
You had $300 million. And you made 55.
Forex, yeah.
Could you explain the Elliott Wave in simple terms?
We're going to get to that. Thanks, Tom. Okay, so what else hurts you about? What hurts you trading and investing? Inconsistency, not having rules, not having stop losses. Have a gentleman who was right 95% of the time. He couldn't understand why I'd lost $1.2 million trading the SPY. So that's easy. Tell me what you did. He said, well, if the market went up and I was long, I'd take 5 pips profit. That's good. And then if the market went down, I'd buy some more. And if it went down some more, I'd buy some more. And if it went down some more, I'd buy some more. Oh, that's interesting. He said, oh, good. What happens when it keeps on going down? He said, I'd buy some more. That's why he lost money. You're going to lose once, and you've lost everything. Pointless execution of bad money management because of prior successes at buying for 5 ticks. It was a SPY trade. That was me in 1989, during the Troubles. I look completely different after 5 years, dazed and confused. These are my passport photos. And you can feel really bad doing that sort of stuff. So what I advise you to do, if you're going to lose money, lose a little bit. And be prepared to lose a series of little bits. Because when you reach a bad point, and it's been good for bank traders, been good for bank investors, it's been an awesome run. Hasn't been much fun for people who've been buying Rio or BHP or, for example, FWD or some of those Forge Group, FGE, those sort of companies. So here's what I look for a trade. We're going to talk about that. We're going to talk about some Elliott wave for darker. So we talk about the spiral. You've all seen this. It goes on and on if you've done the ATAA course. I don't know. I wrote the GANs section of the ATAA course, which I think is now in the higher level. If you read that, I don't know what Elliott wave expansion and contraction numbers are doing in the GAN section. I know they're close, but there's no cigar in that. I think they've changed that. So here we go. This is a classical Elliott wave pattern. In the beginning, there was chaos and we knew nothing about anything. This was a low, but we don't know where it started from. A market existed. It just started. And then it had a range. It went up and it fulfilled about 100, it moved up to the top end of the square. Just think of the squares as numbers and don't worry too much about anything else. We'll call that wave one. We're young, naive and stupid and we see the market go up and we think, markets only go up in one direction. And therefore we say, let's think about buying this market because Alan Kohler told me it was good, or Ross Greenwood told me it was good, or even David Koch said you should be buying the stock market. They had lots of experts on. And then all the experts are telling you to buy it, and then sure enough the market drops down a little bit, doesn't it? There we go. It drops down, and we call this a correction to that move up. We don't know whether it's a really powerful move up or an impulsive move, but what we do know is that it's coming back down, and if you bought it at the top, you feel bad or lose a bit of money. Then it has a little bit of a rally up, and this would see an A, B, C pattern, and then a dip down. And this was what's called a simple wave 2 correction, if and only if this is a wave 1. Generally, wave 2s are corrections where most people are very bearish at the bottom. In fact, they're more bearish over than over here on that low. Down on that low, if it's come down from there, people are bearish, but some people are actually buying back. On this ABC pattern here on the downside, we see the market come down around about 61.8% retracement on average. It's a guide, it's a nice guide, and it can drop down in 3 waves or 5 waves. We won't go into those details. We call that wave 2. Now wave 2 is wonderful because wave 2, if it ends and you can detect it, can give you a risk-reward ratio of 3, 4, 5 to 1 in terms of where your entry is versus your stop loss. These are the sort of things where if you're a system trader and you see this sort of behaviour where wave 2 comes down, retests here, breaks back through here, you can start turning your trading systems on, and even if it breaks through here, you can start turning your trading systems on, and even here you can turn your economists on. The economists start to buy in up here because they've been really bearish down here. And then you see them blast up. So that's where you get your risk-reward ratios. Now, Elliott wave gives you some calculations. It says if you measure this as wave 1, you might see here go 1.618 times wave 1, an extension, an impulse move. You'll often see price gaps in that move up. And what that does is it means that it makes up for a lot of mistakes. So if you're buying breakouts and you get price gaps the next day, you feel really happy watching the market going up. This is where you can buy breakouts. Economists start making money up the top. They start making to get into the market around this area here. And if you're a good little technical trader or technical analyst, You can buy on the breakup point. You can try and buy down at 61.8 with a tight stop loss. You can have a tighter stop loss. And sometimes this can go 2.618, 3.618 and have good extensions of that wave one. This is Elliott wave theory. Right. Yeah, you can use the old bottom, you can use it down here, but I try and nudge it in down here. Not, sorry? If it goes much below 80%, it's much below 70%, it's a wave B, right? If anything. Yeah.
Really tested that.
Okay. Are they really wave twos?
Yes.
Maybe. Yeah, but what I say is I'm going to control my risk. If this drops more than 70%, fine. I'll have a look at it if it fails down there. That's okay. I don't mind doing that. All I'm doing is I'm trying to find a tight stop loss. If I'm buying a dip down here, I'm going to have a tight stop. And then I have another go if it fails. I have a go on the breakthrough here. Elliott wave gives you a lot of options. So you might say, okay, well this is really a wave 2 can come all the way down here. Pure Elliott wave theory, Glenn Neely theory, neo wave theory, you won't see that. But if it works for you, great. Because it could simply be an A, B, C, and an A, B, C is a good thing too. Correct. Correct. So it shouldn't drop down below there, but it might come deeper. Brad's actually saying it goes deeper, maybe 80%, something like that. But that's okay, I'll get stopped out. This wave 2 is only good 40% of the time. So if you are a trend follower, you'll be used to this sort of statistics. Most trend followers make money 40% of the time and lose money 60% of the time because markets range 2/3 of the time. Did you know that? Okay, so good trend followers will know that and allow for that in their psychology. So this good breakout here, you can get some tip-offs by breaking through there, by breaking through there, by breaking through there. But you can start turning on your trend following systems and buying breakouts when that happens. At the top of wave 3, everybody, we have investors down here, everyone's an investor down here and they're holding on and praying that it's okay. We're not having traders. Up here, everyone's a day trader because they've been making money on this big boom up and you're seeing everybody's advertising how good they are. You're seeing options. You know, if this is a stock market, you're seeing options companies coming and advertising to you. And I've just had some calls from options companies wanting to come to Australia and do talks here and promote stuff and those sort of things. You see that sort of behaviour at the top of a wave 3. When everybody's bullish, the people who bought in down here, they start to take some profit, like we did with Woodside Petroleum. You saw that on that expansion, we started to take some profit, part profits, to bank some cash. So we got wave 3, and what happens after that is a confusion pattern. Generally, this is stylized, it's not always going to happen. And often if wave 3 is ABC, we get a fourth wave structure and a contraction and a triangle. Do you remember the triangle you saw in Woodside Petroleum? So I tried to give you the practical one before the theoretical one. You get that often, people put the theoretical one first. I never know which is the right way to do it. Anyway, this is simple. This, when you see that sort of pattern, that's worth 70% of the time. You'll see the market run up close to either the wave 3 top, maybe it fails, maybe a little bit higher, where wave 1 plus the end of wave 4 is the target. So you can add these two together. So going from here to there is your target. And that's about 70% of the time. So in terms of risk reward, you're hoping for a 2, 3 or 4 times your risk reward here, 40% of the time. For the mathematically inclined, that's profitable. And here, you're looking for risking $1 to get $1 70% of the time for the mathematically inclined. That's profitable over enough trades. So we get here wave 1, 2, 3, 4, 5. Now, these have good strong moves. This has good strong move. This has a pretty okay move. Wave 5s usually struggle a bit, and we've got certain patterns we look for. So we can see these retracements. This is chaos falling all over itself. This is the best sort of chaos, and it's really imbalanced because nobody is making money here and everyone gives up on it, and then you get the move up.
Can it also break out on the way down?
It can break up on the way down, in which case you lose money. So it can break up on the way down, but at least you have some tip-offs. 70% of the time it's probably going up, 30% of the time it'll fail. So that's the sort of stats. Are there any questions? I know that's probably pretty simple Elliott wave, but those are the two rules I really look for. And can you guess? It's look for wave 2 and wave 4. And I look for those characteristics. And when I get that chance, I don't care. For example, on Woodside Petroleum, we saw that big move up.
I think when I've seen this on the charts before, the big deal is finding this wave 1 and 2. And you see on the couple of there's a move up.
Yeah.
And the move down doesn't break below
Yeah.
the previous low. Does that mean it's a wave 2?
There's a few other quotes.
If you've gone from a low to a peak
Yeah.
and back down and it's starting to go up again, and that
Yeah.
low is higher than the previous low, is that what you call a wave 2?
Well, it could be, in theory, it could be a wave 2 as I've labelled here, or it could be a wave B. You don't know the answer to that, but you're hoping that it's a wave 2. A B wave, if you relabel that and said that was A and this is B, you come up with a target somewhere up here for C wave, which is still, C waves are still generally an impulsive move as they're the finalisation of the correction and people get wound up.
Can you show how all that fits over the WPL chart?
Can do. We have to go back to some bigger time frames.
Why do we have to do that?
Because I said.
Well, I've not seen any. Tell me how it fits.
And I'm not saying it's perfect in WPL, but if you go down to the daily chart, and this is difficult here. I can't see it. Okay, let's go. Okay, let's have a look at WPL. That's really too big a time frame, which you can see clearly. It looks like the daily chart to me. Okay, wave 1, 2, 1, 2, 1, 2, 3, 4. And I haven't given you that yet, but this is a classical wave 3 with price caps. Classical wave 3. Wave 1, 2, 1, 2, 1, 2, 3, 4, 5. That's why it can go all the way to $48 because in Elliott wave you'll get wave 1, 2, 1, 2, 1, 2, and it's boom. Because everybody's thinking it's going up. So 1, 2. There's an ABC pattern there. Retest the low. That'll make Brad happier. So that's more like 80%. And then you've got those moves up. Right now, if the theory is correct, we should be forming an Elliott wave where the brokers will be telling you to buy it. And then you see it come back down into here and then have another go up. Is that clear for you then? You saw my chart before. It finishes there. 1, 2, there's another 1, 2, and there's another 1, 2, 3, 4. We're doing 4 and coming down here.
Second one to inside
Yeah. They're nested. Elliott wave works on higher time frames. If you don't understand what the wave count is on the lower time frame, go higher. If you don't understand what the wave count is on the current time frame or the higher time frame, go lower. So it's like a set of Russian babushka dolls, Elliott wave. You've got all these movements within movements, but that is 1, 2, 1, 2. So yeah, there's your 1, 2. You can see it start to break out here. And I waited around for it to come out. Or is it over here? Basically, I waited around for it there. Is that all right?
1, 2, 3. And the other 1, 2s are inside that third one. So the third one starts again. So the third wave is broken into 1, 2, 3, 4, 5.
Yep. And just to confuse you, confusion is good. Believe me, you're like in a correction at the moment. You're in a congestion area. Confusion is good. Confusion comes before a breakthrough. So what you're seeing there is that if you can start drawing by hand, you'll actually find the swings and understand it a little bit better. It's highly conceptual, but I was so bullish you wouldn't believe on Woodside Petroleum. I was jumping out of my skin. I couldn't wait to tell people, and I told it on the TV before it broke out and told people not to buy BHP but buy Woodside Petroleum, which can be foolish. And I went on the TV and said, buy Woodside Petroleum, and it just went gangbusters. So sometimes I look like a goose, and sometimes I don't.
Yeah, the problem is to identify this every tweet. You can best identify them when it's all over. So what's the choice?
Yeah, that's true. They look really good when it's all over, but I put my nuts on the line on TV last week and said, buy it. Mike, have you seen me put my nuts on the line before?
Many times.
Mike's a customer I haven't ever met before. He's just
What do you tell people to do at the moment?
I'm telling people to take profit. I've been telling take some profit, but keep long, keep a position long. But we've made all of that move. We've taken profit there. I'm looking to re-establish back in, but I don't want to lose the long position we've got from $39. We've taken profit on the breakout from $40.20. We took profit up there. We took profit on 1/3. We took profit on 1/3 there. We're still running part positions. So what we're not doing is getting out of this. It's a bit like the stock market. You know, whatever you think about the stock market, you still can't get fully out of the market because it hasn't turned. You want to be in the equities. No. So, Mike, your one, Jumbo International. You want to talk through that? Because Mike doesn't ask me many questions. But, when he does, you want to just walk through on this one. And where was it that I gave you that?
That's about 370. It's further back.
Was 370? Okay, I'll go on the monthly charts.
Yeah.
Okay, so this is Jumbo International, the most crappiest name I've ever heard for a company you've ever heard. I gave a pretty bad response when you asked me about it, didn't I?
You know, I saved quite a few odd shares, and this one I got in at about 80 cents, and he said at that stage it was worth about $3 as a target. And when I got up near the $3, I asked him again, and he said, "Yep, that's the target." So I sold them all out, even though I love this share. And he said, "That's my biggest problem. I love shares. I shouldn't love shares. I need to listen to David more and just trade them." But he did say, "Don't look at it again until it gets to $1.40." So I set my alert at $1.40, and then a couple of weeks ago, I got an alert, so I sent an email to Dave and said, "Is $1.40 good?" He goes, "Oh, you can try this tight stop."
Yeah. And it's so far holding around there, but sort of have a tight stop, have a go. See, the worst thing, what I learned from the turbo traders who are Russell Sands, they're the ultimate mechanical system traders. They're not the best system in the world, but they have very good money management. Is that you don't want to miss out on a trade that you make some money. So Mike said, okay, the plan was up here was to look for down here, the plan down here was to look for up there. So let's work the plan and put a tight stop. And that's what I do for Mike, and Mike goes, oh yeah, what, you know, he'll buy it, because obviously half of that is pretty good. Getting back in 50% lower is not bad. So get in, see what happens. As long as the company's not going broke or not overloved, especially if the brokers hate it and the research houses hate it.
You show us how the Elliott Way go to buy, where it's board and all that. How's that?
Oh, this is a good base breakout. See down here, where was it there? It was just busting out above that 80 cents. You can see,
Not talking about Elliott Way at all.
I'm talking about A, B, C, a breakout there. And then Mike asked me a question about it because I never look at it. Anything called jumbo, I wouldn't, I wouldn't like. But people ask me about all sorts of stuff, and it brought the breakout. And I said, 80 cents, go for it. Probably up here. That's what people pay. Yeah, well, this is interesting, isn't it? This is more like a B wave here, because that's a big sort of triangle in there. So you've got a nice triangle there. So up here, basically I was coming off from the base formation. There's a calculation I use from the base. So here you could be saying this might be wave 2. It's a hard wave count when you're looking at a monthly chart. You have to go into a bit of detail. But certainly down here is worthwhile buying. Most people have been shaken out down there, and you have a tight stop. So I hope that's... Oops, no battery. I'm going to run out of time in a second. We're going to have speed slides now. So we've seen all of that triangle. So this is a classical Elliott wave, fourth wave pattern. I've got 10 or 15 minutes, but I've got no power, Mark. If you can come and work some magic. Says you've got 7 minutes. If I can get some power.
Blue screen's always confident. Blue screen's confidence.
Then if you can just get this one. Is there any questions about
It should be right now.
Big Bang Theory? On the spy is a complete bastard, don't touch it.
Good advice.
You'll ignore that. Everybody do, I tell that. They all do it. They go, no, it's the hardest market in the world, therefore I've got to actually trade. You know, do something that's easier. There's so many markets to trade from. And the SPY is an amalgam of many different things. And like, yes, I can pick the SPY, but it's like DE-mini. DE-mini, I like to forecast it. But it also is an amalgam of so many different moving parts. Try and get something more pure. Like I like coffee and gold and stuff like that. We've been getting into gold. If you try to trade the SPY is also really good when it's actually moving, and it's not really moving at the moment. I mean, there'll be a time where it'll be great, but it's not now. So it does Elliott wave patterns, and as you saw in April 15th, 2010, I picked the top. It was an irregular B wave correction. I nailed that top. We got to sell the SPY short for Profit Owner Group members at 50.36. The high was 50.37. I just nailed it. Genius. Thank you. Very impressive. Okay. So here's the your call of, this is where people send me things saying, well, my call of $76, I actually called $78 from $55 on CBA. We'll do a couple of conclusions. Now, for anybody here whose minds are in turmoil about what I just taught you, that's okay, because my mind was in turmoil when you try and go down to the infinite detail in Elliott wave. Some of the craziest people I know are Elioticians because they spend their minds, all the energy, always counting little things. What I've tried to give you is a big overview. If you step back from the chart and move up and down time frames, you'll understand it better. Now, I don't just use Elliott Wave for my stuff, but I look at the pattern of the market, and it's really important for me to look at patterns in markets. And if you go for the chaos is wonderful. Chaos will give you some opportunities that you may not see. So if you see a market that has been going sideways for a long time, then you might start to get interested because there's fuel to the fire, some petrol to be poured onto it. So balance is actually good in the markets, but you don't want to get in during the balance. You want to get it out as it breaks out of that balance state. And I call that a bracket the market trade. We have some special rules around that. Now, you should think about what wave it's in because your trading tactics and your trading system should be different depending on what wave it's in. So all systems traders, repeat after me, I will trade a third wave. If it's in a B wave, I'll have different rules for trading if it's falling all over itself. Basically, don't trade against the trend if you can help it. We have some rules for trading against the trend, but what I'm trying to do is I'm trying to get in on the shorter term trend to the downside that's corrective of a larger time frame. This is the sort of thing that if you can learn to think in layers. If you're getting confused by that, that's okay, because the market will go up in 5 waves in a 5-minute chart and come back in a 2-minute chart in a 5-wave chart in a corrective pattern. But it could be in a rip-roaring bull market on the dailies. That's what happens. It's time frames within time frames. Babushka dolls. You should also do your measurements. We've talked about 2 retracements. Which one was the one that I didn't mention? The 38.2. Okay, the 38.2% retracement is the one I didn't mention, is the one you should write down now. It is the one that happens more often in fourth waves after third waves. And basically always have a logical stop loss. And that's got to be affordable for you. And it should be based on price movements. It should be in a logical place. And if you're a systems guy, you just turn your system on and then go for it. Rod's a systems guy. And Rod was trading coffee and we were all over coffee and Rod's trading it for different reasons. And Rod was saying, it's the best trades. And we got in at 117 on the coffee. We got out at 198. I don't know if you know about coffee, how good that is. That's just fabulous. We got back in again and made a bit of money. On another move, we got in at 168. We rode it up, got out 202, and then got in again, lost a bit of money on part of the position, lost a bit of money on the other position, and ended up break even. But those sort of moves are with Elliott Wave, and that's where Rod was making his money in the third wave. You didn't know that, did you, Rod? Or you didn't care?
I don't understand Elliott Wave.
You didn't care. You don't have to care, but if you can turn your systems on, think about it in Elliott Wave. So.
We have a 50% stop reduction at
Why would you want a 50% stop? No. How close are Dan and Elliott? Not really. What's the 5/8 retracement? Dan talked about 7 waves in a move. What do we see in Elliott? 5 waves. They were contemporaries. All the good stuff was in the 1930s. Okay, so if you're going to look at me, Profit Hunter GRP, David Hunt 8 for Twitter, David Hunt Profit Hunter for LinkedIn, if that's exciting to you. I have a YouTube channel, Adest AUS, ADEST AUS. Facebook is Adest Profit Hunters, blah, 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 blah. blah, blah, blah. Sometimes I have free webinars explaining stuff. If you link onto those, you'll get messages about those things. And where are we? We talked about that, what I learned. If you go to that, you'll get the recording at s.com.au/ATAA, and we'll get that sent off to you once it's uploaded, so it'll be off my screen, so it'll be easier to see. We blah, blah, blah. This is to remember these forecasts. These are the sort of things I do in advance. And I do Elliott wave counts on that. That's 2012 forecast, looking for a top. This is the actual underneath it, 2012. Looking for a low, late June, early July. You can see I missed out on that. Top, 16th of March. I was looking for a top early March. This is 2012. October top. This is the 2013 Dow forecast versus actual. You can see similar patterns. The timing was pretty good as well. Just to summarise, biggest learning, don't let your ego get in the way, because Michael, if you talk with Mike, he'll probably tell you after people have slapping me on the back, I just get on with business, don't I? I go, oh, that was good. And people go, that's great. I go, thank you. Falls come after a pride. Be humble or stumble. And there's Nigel's just put that down for you. Look at the three retracements, 61.8, 38.2, and hang on in the moves up. Thanks everybody. Hope you've got something from that. Thank you all. Did anyone get a month's membership to the Profit Owner Group? No one. Okay. It's still in the cards. You got it.
Spent a lot of time up there to read down through all those. Has anyone got any further questions for David? Just one there at back of the audience.
What's my view on gold? Well, we've been short gold since we've had, I don't know, goodness, we had close to $100 moves short in gold over the past few years. I was looking for gold to get down to 1262. We've been short since 1316, and it came down to 1268. It just missed my major retracement area, which was the 61.8% retracement of the entire move. If you actually email me, I'll send you the video of me forecasting the date and the low price within $4 of gold in December last year. That was the low. You can see how I did it using Elliott Wave and no smoke and mirrors. That was a live webinar. It was recorded. I think it was the 19th of December I did and I forecasted for the end of December the low. So we've seen a Fibonacci retracement to within $6 of that target. We are long gold market vectors in the US because it reached its proper retracement, and we're hoping for higher on that. We have been stopped out of our short for a profit in gold, and I'm trying to work out what the hell's going on with it at the moment up in this top. I will be selling a little bit higher up with a tight stop, because I have this feeling we're going to do a bit more ranging and maybe trade the 1262 low. This year is a good year for gold. Because it's done the Fibonacci retracement, we should be looking for reasons to buy it because everyone hates it. So so I like gold in the longer run, but I'd like to see a dip to buy. If it breaks out topside, I'm happy because of gold, the GDX ETF. I'm happy because of that. Personally, I'm long Newcrest from $7.50 still. For my Profit Owner Group, we're out. We're looking for $9.08. Remember, Mike's a gold bug. At the moment, I think it may do another, what did I say today, about $11. It might go $11. So, in Newcrest. So I like gold. I like to be accumulating gold, but I'm not sure if it's absolutely the right time just yet. I'd like to see one more panic because Russia and Crimea and Ukraine, all of that is just something to play with on the weekend. It's like a weekend war. They come out, they get bearish on Friday, and then they get bullish on Monday, Tuesday. And then everyone forgets about it, and then it goes back. So if gold is up for that reason, then it's probably in a range. Anything else?
One more.
Right.
David, Lucy's earlier one about Elliott Wave being much clearer in hindsight than
Absolutely.
in foresight, I think raises a good question. Often you hear the joke that I can never get two Elliott Wave technicians to agree on a wave count.
Yeah.
Now, what would be your, and I guess that's been my experience with it too, it's something difficult to apply. What's your advice to members who might be confronted with conflicting wave counts?
Okay. Well, think of this. This is why I don't go into a lot of detail on Elliott Wave rules. If the market is correcting, i.e. falling all over itself on decreasing volume, you're probably in a wave correction. Is that wave correcting in an ABC pattern? Is there another wave in the prior move that relates to that and looks alternate to that? Then you're probably in the fourth wave. If there is another wave that's gone up impulsive and you're in that first section, you're probably in a wave 2 or a wave B. So what you want to be doing is looking for decreasing volume and falling all over itself. And it's just falling, it's just that stumbling around congestion thing. Now, Elliott wave counts, it really doesn't matter whether you think it's a wave B, 2, 4, it's just, yes, you can see in hindsight perfect ones, but quite often you can see them unfolding. Gold on its retest of the high. I nailed it on Yorba TV. If you ever, there's a traders program in the States. Sometimes they invited me on. In February 2012, I went sell gold, and the high was exact price level. I can't remember exactly, but I've sold gold that year in October 2012 and February 2012 and October 2012. We sold the highs exact time, and I've done it when Yorba was right on there, has put out a trade, because it was just perfect in terms of ranges and targets and things like that. So I'm using ratios and stuff, and I do say this is the level. So you can do that. The other thing to remember is that if it's not perfect, you get yourself stopped out and you lose a bit of money. And that's all you're doing, which is what you're doing every day when you turn your machines on and start firing orders into the ether. So you just make sure you have a stop loss. If it works, great. If it doesn't work, you've lost a little bit of money and then you leave your earnings and you go, okay, where's the next one? So clarity in Elliott Wave, look for the volume decreasing, congestion, look for confusion in people. Okay, let's do the test. S&P 500, is anybody, who's bullish on S&P 500? Raise your hand. One hand. Who's bearish? Raise your hand. Okay. So, who's neutral? Yeah, who's neutral? Good question. Okay. Lot more neutral people than there's probably more bears than neutral, than bulls. A bit more neutral. Remember, who was here in August 2007? What did I say in my talk? Yeah? Okay, there was the first time we'd seen the CEOs coming out of the woodwork. Brad, you got a good memory. Okay. The S&P had gone to new highs, and I've been saying the market is probably topping this year in the forecast 2007, and it would be the high for the next 4 or 5 years. So I'm looking for the top, and the ATOA room had about 200 people here. It was a bit of a different group, set of people. Obviously, a lot of people just aren't there. So you were here, I remember. You were here. And I put up the hand, and everybody, I said, who's bullish? Half the room's hands went up. Who's bearish? Half the room's hands went up. And who's indecisive? And a couple of people's hands went up. And I said, right, this is the fourth wave. Fantastic. We're going to get a push up into October. So that was actually the minute I decided we're going to go and get it pushed to new highs. And I said nobody pays attention. You know, I could tell you, I can. One guy I said on SLR, I don't know who watches. No one watches Sky. No one watches Sky. Anyway, this guy from the state, from Perth, Western Australia, his name was Selwyn. He rang up and asked about SLR Silver Lake, and this was in February last year or the year before. And he said, "What do you think in Silver Lake?" And I gave him every point to within a cent of where it could go in these swings. And for about it was about 2 months. And he came and saw me at the Perth Trading Expo, and he said, "Wow, how did you do that?" I said, "Well, that's what the rules said it should do." It was actually really classical technical analysis. And he said, "Oh, well, you know, it's what I do for my members. How about joining?" He said, "Oh yeah, I'll get around to it." And I nailed it for him, and he never became a member. Too useful information on the TV. So some people, if you like forecasts, you might get some good TV stuff. Anyway.
I think we should probably start to finish up there. And one thing that I think that's, I've got a few things to mention, we've got to do them quite quickly, but I think actually what's the most important is to thank David for his presentation tonight. But I think what's very important is to also recognise the many years that David has actually spent with the ATA, many hours over many years, and what I would imagine during a busy professional and family life, and he probably doesn't get the recognition for that. So I'd like to personally thank him, and also on behalf of the ATA for that.
Thanks,
and I'd like everyone to just bear in mind that we've got dinner afterwards. I've gone down and made a booking, and I don't think he's signed up for kids for private school education, so you better turn up. And if I can get as many down there as possible, it would be appreciated. David, you're able to come down?
Yeah, I'll be down.
Yeah, so David, be down there, and it might be an opportunity to ask questions in a more casual environment. The conference next week, there still is the opportunity for you to take up a ticket, and I think you better move on that quickly. Everyone's looking at flying down Thursday for a Friday, Saturday and Sunday conference session. And I'll bring tonight's meeting to a close. Our next meeting is on the 19th of May. Jordan Alicio, who's the Chief Economist with the ABC Bullion Company, and he's a very good presenter, and I thoroughly recommend him. It's not so much technical, it's more of a macro central bank gold price outlook fundamentals. And I think that will be a very interesting presentation, similar to what you may have seen with Owen Tracy earlier in the year, which was a special presentation. I'll bring the meeting to a close, and thank you for coming tonight. I've forgotten the book draw, so this is going to be very quick. And